So let's start from scratch, just to let all the people that are joining now to understand how a regression trend can help me very much, using later the pitchfork to spot the up and down lines that can help us in trading swings without bothering about drawing Elliott waves and similar things that are, let's say, a little bit complex. So let's start with Bitcoin, because every one of us know about Bitcoin charts, and let's select the regression trend tool here, starting from the crash in March of the last year, that one that is known as the COVID crash. And let's draw these bands that are the regression bands. There's also a number, the Pearson number here, but we will not talk about that now. It's used for market sentiments. If we double click or use options here, we will see that the regression trends is using standard deviations for drawing these bands. That's a similar principle that we are using in Bollinger Bands to have more or less details. So if I increase this number, I will have more extension on the bands. But the number of 2 is enough for what we need. Also, if you go too much high and low, it will be something that can be useful for historical data, but not very useful for trading swing and similar things. So the source is always the close of the price. The style, you can change your colors, and you can extend the lines of the regression trend tool, which is maybe something that can give you the angle or a visual effect for understanding that this is an uptrend. And the Pearson R is that number that I showed you here, and that can be quite omitted at the moment because we don't need it. Coordinates, if you want to be perfectly in line with the bars, you can set the number here. I'm setting 233 bars far from us, so in the past. And the second bar is 299 of the cycle, but it's not important. Visibility also is not a matter that will affect us because we are using this on a daily time frame, but it will be visible also on hourly time frame. And to use it now, I'm not using the logarithmic scale. I could add the logarithmic scale, but the result will be different. So let's see how it differs when I use the logarithmic scale. In this case, I'm still on the daily time frame. I reduce a little. Look at the logarithmic effect. Since we are performing a transformation on all the prices coordinates to get all the historical data from Bitcoin up to the past and price action that are related to very early periods like 2012. What we have is a price action and the coordinates recalculation. So the regression trend is not very useful in this case. I should change to 48 the bands, but it's something you will not do because you are interested in trading, not in analyzing the trend from the starting point of the market for a given asset. So what I said earlier, we see here that we have spikes up here that are practically giving us a price action out of the bands. We need to reduce those spikes, moving the starting point. In example here, you can try. I tried earlier and I saw that this is the best compromise for us. So what we know here is that from 28th of November 2020, we are still in an uptrend. So when you have to spot how the market is going, what is the performance of an asset or whatever you want related to trends, you can use the regression trend to understand that here we are still in an uptrend. If we reduce the amount and we go in example to 3 of March, which is the date where the downtrend started, you will see that the trend is going down. So now we have two ways of approaching for adding our pitchfork and use these regression trends to effectively have some advantages when trading. The first one is that we add two regression trends. So we know that we have an uptrend, but from 3 of March we have also a downtrend. Let's add something that starts from here, in example, to see the full uptrend of the moment. These are all fractions of our trends that are very useful to understand adding more. It's something that can give you the option to understand how, in example, this was going up, then crashing down, and from this point is going up. So at the moment we have a trend recovery. It shouldn't let you think that this is going something that will persist in an uptrend. It's possible that we are having a trend reversal here. We have many engulfing candles. So if a trend reverted, you generally have time, because this is a trend reversal, but it's not a real trend reversal. It's a trend reversal based on this long period. So if we finish here, you will see that this is a V-shaped confirmation, exactly like the downtrend and the uptrend are bounded in these limits. So how I trade this? Once I played with these regression trends, there's also some helpers and indicators. I will show you right now one that you can use to integrate your trend study. This is an activity you should do from scratch when you start analyzing, before adding resistances and supports, to spot where we are. One of the first, let's say, laws of the trader is know the market where we are at the moment of starting an analysis or a trade or the price action and so on. You can also go a little bit far in the past if you have at least a pro plan with a bar replay, and hide this to start thinking about how are you effectively doing the correct forecasting of the trend. We will see how to do in a few. Let's remove the most basic part of the small trends. Let's leave this big trend, and now let's add an indicator that is named linear regression auto adjust to ideal Pearson. This indicator by X11 Joe, it's an indicator very specific of the trend that will give you some informations. But in this case, as you can see, we have two regression trends. One is the big one starting here from the 1st of September 2020, and the other one is starting here. I don't care about starting so earlier, because I know that I'm interested in the trend that is starting on 3 of March, in example, of this year, because I already spotted that here is where we started going down. If I go here, that could be interesting, I will reach a point where we see the trend going sideways, completely flat, in a parallel channel like this one. So in example, if we start here on 14 of December 2020, we will see that the first trend, this big one, that is now 360 periods, we can reduce this to, let's say, let's start with 300. I could check from the other, from this one where it is, but I want you to focus on how we can change those values. If I go here and I click, I will see that on coordinates I have 299 on the second bar. So here 299, but I have to subtract the 40. So I think that 260 will be for our indicator the correct zone that I'm interested in spotting. Let's see. Yes, it is starting here, as you can see. Now I want to do that for the 3 of March. So you will see why. 3 of March, here I have 299, 1, so I have to add about, to reduce of 80 periods, this number, let's say 180, more or less, we'll see now. If we had to tune a little, that was perfect. We can take out this one. And we have, so the long trend that is here, current long trend spotted by the indicator as bear trends. The short trend that is starting 60 periods after the main trend is bull. And we see this here, of course. So now, with this indicator, we, let's say, succeeded in spotting the two main trends. The one that went downtrend, the most important, and the other one that started a reversal. At this point, we have to trade these kinds of informations, and so we will add this last trend that we are spotting with this indicator, removing the indicator, and start checking for the ranges. What I see here is that on this point I have a little spike going out, so I will reduce this, trying to find the best fit for my bands. Until I find it, I will search. Maybe, no, here it's not good. So I see that I have to get a compromise. I can increase the standard deviation that I showed you earlier, but I can also use this spike as something like a difference. You can see that here I just had a contact on the upper band here, so I will use the pitchfork now to establish my personal range of trading. Pitchforks are various. Generally you will use just the pitchfork and not the shift or modified shift inside pitchfork, because these are for angles that are related to trend spotting. So we will talk about them in the future when you are familiar with the main pitchfork. Pitchfork has 3 contact points. I select pitchfork and I start from here, in example, drawing the line, and then I have another point that I should point here, and I will start now having my trend line. Since here I have a trend, I'm measuring from this point, let's say this green candle, let's zoom, this one, to the lowest one. If I stay in the center of the trend that I spotted, I will obtain a different phase. But if I move a little and I start playing with this, maybe contacting this point to the center, I will have a way to, let's say, have my main bands for trading. So I will hide the regression trends, and my waves, I will not draw the wave. I could, but then I should start from here and consider that I have 5 waves like this, more or less. Extensions is not important. It will require knowledge of the Elliott waves. I can use this without knowledge of them, just to spot how to trade, but pragmatically these numbers are not really perfect for many reasons. First, because the wave is starting downwards. I should start tracing the wave from the contact point here. Well, it's in line because we have we can also draw the horizontal lines here. One is here. Let's call this the supports of the trend, and here too, moving this one a little bit here. The more you are accurate, the best results will be in your forecasting of the trade. So at this point I will add the correction. After the 5 I have an ABC correction wave. Let's see, finishing on the red candle. And I know here that a new set of waves is starting. Now I don't want to draw again all the waves. If I replicate this and I copy paste this set, I will get probably errors because I will forecast something that will not happen. But I could use a copy paste to move these waves here and to fit them inside the current pitchfork. So I could forecast in my case, that if we have no reversals, this could be the range of my trades. I should also consider always the upper bands and maybe draw another set of waves in the bands inside, like this one, in example 1, 2, 3, 4 and 5, and then change the color, so just to increase visibility. Everyone can have its own strategy. It's not mandatory. As I said earlier, you will not find so many documentation on this because it's kind of subjective activity. You have your way and it's fine to spot the trading ranges. So if I want to now effectively put my long positions, I could consider a long from here. I will not consider how much I will be longing or my risk management now. I will just consider 2.2 pips of risk reward ratio and set my longs for the future if something is effectively confirming the trends. And I will have the other shorts too. Short position here with, as you can see, I'm selecting the less risk part of the trade. I'm not going down to the lower band or the upper band now that I will search for the trades on short. You can follow this strategy when starting having the position of the trades, and I'm using a risk management of 2. Generally 1.5 is fine too, but you have to see where the stop loss will be. I mean, this is just an indication of how you can start trading these kinds of intervals here and start preparing your trades. This is for, let's say, preparing your ideas and so on. Now we have points that are spotting something like engulfing candles, so it's very probable that this forecasting will not be the right one. So with the tools that we used earlier, in example the regression trend as it is, I could start searching for more informations on the little sides of my price action. So from here I see that I'm going sideways. So this could be a reversal or a trend, an uptrend confirmation. Now for the uptrend we already have everything here drawn. We could do another kind of activity, which is hide everything here. I will go to layers just to hide them, and I will hide all the shorts, the Elliott waves, why not the horizontal line and the pitchfork too. And I will just leave the current situation because I already have these previous layers. I will do another thing. I will create a group of drawings here in order to hide and hide later if I want to keep trading the uptrend if we don't have a reversal. But here we are on a critical situation. We know now that from Bitcoin we could fall down because it's possibly potentially a trend reversal. There are many ways to understand that this can be effectively the ending point. The most simple way is to use lines without having to bother about GAM funds and similar things. You just start drawing some lines here that are trend lines that already affected the behavior of the coin or the asset earlier, and you will see that, I don't know, here I have a support line that is a resistance now, so I will draw this 1, 2. You draw lines, you find combinations or what you have from the past data, because on the distribution part of the Wyckoff model, and we know that is quite true, that is a distribution, you can have many trend lines like these, that can give you, look at this contact point in example. This could be a convergence here, but also this contact point. So if you do this kind of activities, you will find, you will spot things that are related to the current situation that will help you to have, in example, resistances that are from the study of this function, that you can also look in mathematical point of view, just using the line, in example. This is a function, and this function you can study the derivatives and integrals to calculate how the function is going up or down. To do that, the most simple part, without applying complex calculus of mathematics, is just spotting connection lines and axes. So what we are doing here is adding axes to the current situation, and this will help us in identifying, an example, this trend that is very important, because if we take out the distribution, we have this downtrend that is applying pressure right now and is present, and possibly is where we will fall in the future from this point, maybe reconnecting to this trend line until we have a reversal here again. It's just a possibility, it's not given fact or something that should happen, but here we are having something that is very similar to a reversal. So if it materializes, the next price action move will be downwards. We can also add more patterns. Our goal now is to establish how to trade this kind of range, adding new pitchforks. So with the regression trend here, we can also reduce to 1 hour now, why not? We are searching for more informations. So I need to trade this area. I have to add and move my... This, as you can see, will not move if you don't move. You have to unlock it and move to the current price position and search, in example, what happens at this point. It's still an uptrend. If I want to search for a sideways, let's see here. Here it's a downtrend. So the sideways will start here at this level, this one, more or less, yes. This is a sideways, plain and flat channel. After this point, we start having the downtrend. But these downtrends should not scare you immediately, because if you look here, we have a little amount of space on the current price action. So it is possible that we will go at least to 49,000 before starting the fall, let's say. And let's analyze this move visually, just moving the endpoint, the trailing part. In example here, I'm interested in seeing when it starts going up, what's happening to my trends. So it's something that, if it doesn't change, it's moving up this way. I will, in this case, I will let the lines here visible and add another one. It's, as you can see, it's just a matter of playing with these tools, because no one is a scientist on regression trends, and you don't have to bother about the Pearson algorithm on the market sentiment and so on. But for the moment, it's a helper for you to spot directions. So as you can see, I have also, like the linear regression indicator, I should always have something that is pointing down and another pointing up. Possibly the half. I mean, this should be the half of this one. So visually and hypothetically here. At this point, I know that this trend could change that way. So I will have my pitchfork from here, following this line, and maybe a little bit lower, because I know that this complex shape will give me that part, and moving this at this point where I am at the moment manually. You can do that manually, and connecting an example at the higher high previous of my current position, moving this to the lower part of the band here, and moving this to the upper cross of the band. I can also use the crosses here, but it will give me a very reduced range to trade, in example, on hourly. If I want to spot an intersection with what I did previously, I know that here it's more or less the upper point. And now I can hide both of these regression trends here and the other one, and leave my pitchfork. So at this point I will use also the waves, but in this case my waves will be pointing down, so I should go for Fibonacci retracement of these waves and be a little bit more honest with the way I trace them, because I'm just putting hypothetical moves. And as I did earlier, I could do first the extension of the upper bands, because we will never have the center line when trading, and it will not be something interesting to trade. But we can have something like this range, more or less. So, as I did earlier, for the trades, I will add my longs first. That will be very reduced, because here the longs will be less effective. We are on a downtrend, so the shorts will be paying us a little bit better than longs. Pointing to 2, why not? But I have to stay also, one thing that I said earlier, but I didn't complete the information. If you want to take a stop loss and a profit, you should always consider the range of the current price action. So if you start here, let's say that the price will be here and the stop loss will be maximum here, because otherwise we will break the pitchfork limits, boundaries, and we will not be trading the range that we studied. So it's very risky to exit a strategy without respecting the boundaries. And so we will set our longs here and our shorts the same way like earlier. This will be our investigation to avoid various things. The first one is FOMOing. If we lose time investigating, we will not commit errors of entering trades because we don't have nothing to do and we ask, what I can trade today? Nothing. If you don't know and you have not investigated your real target, don't trade. Don't trade because it could be gambling. And if you do this investigation, I'm doing this just with you playing, but as you can see, it is taking time. It's not something that you have ready. And it is taking time to me that I'm quite familiar with these techniques, so I don't have to look at manuals. What I can do now is hiding everything, although why not grouping again everything here, hiding everything, and just leave my positions. Maybe I will leave just my first one. I don't care about the last one because I don't know how it is going, but I will leave a long, the first one, and the first short too. And I will take the other group, the bullish one, and I will select the nearest short. It should be this one, maybe. No, let's see. Oh, I did this on daily time frame, so it's different. I should reduce the visibility because this is 1 hour time frame. The other longs and shorts were on daily, so they are more extended. You can also play with this, establishing how much time do you want to dedicate to a trade and how you want to earn from a trade. In this case, in example, if we go for a measurement of the price range that we can earn here, it's about 7%, while here it's way less. It's, let's say, I control it, undo, let's take this one and move down here to know that here I have 5% of a trade on a short, which is in line with the trend, and on a long I have about 3%, while here on a long, which is in the direction of the uptrend, if in case we go up, it's 7%. So you can play with this kind of ranges and things using Pitchforks and the regression trend. I will switch now to Litecoin, another coin that is currently interesting because it is having less moves than others, and we will see also here how to start from scratch. I don't have additional layers, so starting from scratch at 1 day time frame. Let's see how is the situation of our friend Litecoin. Let's reduce a little. As you can see here, I have March 2020. I will take this option. I could also do another kind of activity, which is spotting the all-time high, not bad, to understand where we are, and tracing a line like, in example, this one, an horizontal line here for the all-time high and another for the all-time low. Let's consider this one and not the period of a flat line, because I'm more interested in these prices. So let's go to track this. Let's start from a basic scratch, fast preparing of a trade, and let's see that here the higher price was 383.170301. So to be not perfect, but let's say that I want to put 393 for this all-time high, and use a model that I have. You can have, no, I don't have here, but I will use the red line because it's a resistance, and I will leave it very powerful in terms of drawing, number 4 for the level. Here I will use the green one, and I will search for this point that is in the lower 1.14. So here you can see that 1.14 is our lower. For that case, I will show 1.14, and this will be my range. Now, what's happening now comparing with our current situation here? Well, we are a little bit higher of the all-time high in this moment at 417. So we could change this line to 417 and consider that from the past we already scored a new all-time high. Like a game, we already get the higher point. Our next target will be to past these higher points. If we want to know what's more or less the next target, we can do a fast Fibonacci retracement for these kinds of trend from the higher point to the lower and take, why not, the 1.6. It's a little bit, let's say, too much. I will use the 1.2 or 1.4, no, I will use the 1.2. That is the worst case scenario here to repeat an all-time high, and this will be our target for the next possible price action when going up. Reducing the amount because it's a target, so that will be there. We know that we are aiming to that point. So at this point we take the regression trend tool. We are on a daily time frame, it's fine. We go auto, not logarithmic. If we go logarithmic, you will see that the price action is changing. Here we have a break of the price. I don't know what happened, but maybe a fork or something that changed completely the life of the asset. We should investigate what happened to Litecoin in 2017. Maybe the Doge fork, I don't know. I should investigate, but it's something anomaly. Let's go here and start from the March of the COVID with our regression trend like earlier from here and tracing this up to here. We can see that the spikes are not what we are searching for. We know that on 3 of March we had a good opportunity, but let's do it like someone that is not aware of what is going to happen. We will see that here the situation is very different because we will not be able to include this spike. Is known to me because I'm fine with these tools and so on, but in this case we have to use another kind of strategy. First we remove the extending lines and we have just to search for the direction of the trend and consider these spikes like anomaly on price action. So we will consider this one, the lower one, as our delimiter, and when it fits like this one in our contact point for the upper band, we will see if we can contact this lower point playing a little more here, but I think it's enough there. So here and here, maybe here in the middle. Yes, this is the ideal situation. We will not bother about this higher high, all-time high in this case. We will have the first trend. The second one we will do optically, choosing the half. So by eyes we can see that it's a downtrend and now it's a slight uptrend. We know that it's depending on Bitcoin, that the market is generally doing the same price action for every coin, but we want to trade it, and since we don't have differences like in Bitcoin of $10,000 for each different level of the price, we just have $1, $2, $10,000, $10 in price action and moves. So at this point we can start with our pitchfork from, let's say, this point, start from the green candle with our first move, starting with the first point here, drawing the line. It's just, you can also draw and click here, not necessary you have to go wherever. And this will be our trend, so this point you will move it here to that part of the candle that is this one, or this one, which is the highest. So you will search from this point at the lower part of the candle, the spike, the wick here. Then you will start with the highest. You will move your screen to get the lowest, and now we have to adjust the direction of the trend considering the regression trend that we have here as a model. So this will not be here, but maybe here, parallel to this regression trend. This way you can try everything in your computer and in your trading view and ask if you have doubts, but this is the easiest way. You just follow your all-time high or your higher high here and then search for the lower and adapt the trend with the center line to the regression trend of the current price action. So now we have what we need to spot our range again, like earlier, and I will use, why not, the Elliott waves like this, 1, 2, long here. I will do a 4 and 5, like this one. It's not Elliott wave. I should retrace with Fibonacci and so on, but it's a tool that is useful to spot my, let's say, intervals for trading, like earlier. And I will follow the inner bands now to have these two ranges. These are my up case. I will hide and group them like earlier. And now I will draw the other case, that is the low case, intersecting. In this case I will search for something like, let's say, to be honest, a trend that should not be tragically down, because I could search for something like this, why not, which is pointing way down. But at the moment we have to be progressive, because a trend to go down this way, like this point, we should look also at other indicators. So we should have moving averages and so on. This is a way to spot the ranges, but you have to consider that if you had here some moving averages, you will see that, I don't know, let's put some moving averages like 2. Not so fast, but we will use the 100 and the 200 just to see how the price is performing. We can use the 99, but on crypto many people are using the 99, but it's up to you. The result is quite similar. I will use the green color for the fastest, and for the red I will set it to the slowest, the 200 one. As you can see here, we have a cross. This is known as the famous red cross, because the slowest moving average is crossing up the lowest. So I know that here, most possibly, the trend will look downward. It's not pointing up, and these lines are still in divergence. If I look here at both lines, okay, we have an attempt of converging, but the price action and the move of these two moving averages is still that the 100 one is slower than the 200, so the price is going down. At this point, being this a confirmation of a downtrend, and you can find here in the past results of this action, when the 200 is faster than the 100, the price is going down until some points. Until they don't converge, like in this case, the price is not recovering. And now we don't have convergence, really. We have to be honest. Although we like that Litecoin should score an all-time high now, it's not the case that we are seeing. It's something that it's changing here a little bit, but it's also related to the current strange action of the price. There are many other patterns that could confirm big fall here. We will not get inside that kind of doom prediction, but we will use the regression trend to spot, let's say, a similar price action move. An example, what we did earlier was the 3 of March. Let's see if there are coincidences with Bitcoin. Yes, I think that this could be interesting because I have this spike here. I could reduce a little bit this move. It should be in line with the other test that we have already saved, but this one. So we will start from the 26th of March of this year and doing the same that we did earlier. So adding a pitchfork. Why not starting from here, taking this line like that and going for, in this case, let's go for a down and an up. Now I will zoom to be sure that it's clear what I did. I just took the highest here and the lowest here. As you can see, we have a direction of the pitchfork to trade ranges, and this is again what I could do is to add waves. In this case I need a low wave here. I could be generic, I should be parallel to the other. It's very generic. I will adapt these waves as soon as I trade this trend, because a trend spotted on daily time frame is not something that is standing just for one day. It's something that you will trade for weeks. Once you have this range, you will be able to define your entry points. And if you are trading on 1 hour, you do this daily, you switch to 1 hour, everything is still there, as you can see. So you go for auto here and you have your trades, and you can use your moving averages to understand. In example, let's add 2 more to see how I can be really helped by 2 more moving averages, like the faster moving averages. It's a really simple strategy, very known. I don't pay, so they don't want me to use so much indicators. I will change I will use just a 9 or my indicator. Let's see if I have mine here. No, it's not here. Let me check if I have it here in the Pine editor. No, it's not here. I should change it. No problem. I will use just another moving average. Okay, 1, it is possible. 2, it's not. So let's remove the slowest. We know here in example that on hourly time frame this is pointing to a downtrend because the red is crossing the green above, and so we know that more or less we will consider this green like this one, and the red we will see that why not consider in this way. It's hypothetical because it could be also this move, but let's see. We want to change a little here the current situation and to add an example at 21, which is a little bit slower than the 9, and with these 2 lines I will spot my entry for the trade. So here I have the 9. When it's going up, it's a long. When I am under these lines, I can go for shorts but not for long. So let's say that here I could have been spotting a short when being here, like this way, an example. Let's go in the past, here, at this point. I didn't pay the plan, so I cannot do regression. But let's imagine that we were here at this point and we see this cross, which is the 9, yellow, crossing below the green, the 21. So in this case, this is a sign of short. It's a common strategy. We removed those big averages here. We know here that if it's a short up here, it's risky. It should be confirmed by the 100 moving average under the red. We know that it's under because we saw earlier. So we can short here, enter short here, and follow our pitchfork. Not to short just on 1 hour, but to know that if we are patient, we can reach the lower part of our safe trend in this part of the band. So our short would be in this case where we saw the price down to here, more or less, with a risk of 2, not necessarily too high, because here I can play with this kind of stop loss. The stop loss could be exactly on my 200 moving average. The entry point is fine. The risk reward ratio is very high. So I could reduce this because maybe the trend will take me time to complete. Let's see that to go down there from here when I have my entry point, I should need about 30 days to complete the trade. It's a very long time. While if I use a responsible risk-reward ratio, also because in 30 days the trend could change. If I use a responsible 2, in example, like this one, this trade could stand up way lower amount of time and could be easier to avoid falling in traps and similar things, because in a maximum 5 days, more or less here, 4 days, I will have my trade completed. Of course, it will not be the same amount of earnings because I will earn 20% instead of earning 60%. But the risks here are much more than the other case. So this is all about how to use basically pitchforks, regression, spotting a trend, and everything like this.